What's up, blockchain? This is Nick from Truth Blitz. Hope you guys are having a good day. We're going to talk taxes a little more today. The more I'm looking at and thinking about this new tax bill, or not the entire bill, but the part of it that really fucks us as cryptocurrency holders, the more pissed off I get. Hence my swearing in this video. I heard Bix Weird the other day say that Trump is trying to, and this is unsubstantiated, but Trump is trying to basically do something to help the cryptocurrency markets grow to benefit the people, which I don't know where he got that from, but if Trump was trying to help benefit the people, I don't think he would have signed this tax bill, being that now every frigging transaction we make, every trade we make in cryptocurrencies is taxable. They're trying to freaking scrape money from us every frigging way they can. All right? So we're going to talk about this in a little bit in depth in a minute once we take a look at the cap here. $772 billion. So we are over $750 billion in overall cap. We are fast moving to that $1 trillion, that first $1 trillion in overall market cap. And Bitcoin dominance continues to drop, 32.8%. So it looks like we have Bitcoin back above the 15,000 mark. It was just below it, so who knows if it'll stay. But $3.59 for Ripple. I fought Ripple tooth and nail all the way. I could have made a lot of money trading Ripple, but I will not buy it. And we have ETH over $1,000. Amazing. Cardano, that continues to rise. That's another one that, I was going to buy more at a pullback, and it has just continued to do what EOS is doing and really kind of just going up and up and really not seeing much of a pullback. So, and again, EOS, same thing, $11.63. I wanted to buy more EOS, and I mean, look at this in the chart here, straight up. We really have not seen a considerable pullback for me to buy more. But things are just really moving right now, and it is a good thing. So let's talk about this. Tax rules for crypto in the US simplified. So we'll read this. To summarize the tax rules for cryptocurrency in the United States, cryptocurrency is an investment property, and you owe taxes when you sell, trade, or use it. With that said, the character of a gain or loss generally depends on whether the virtual currency is a capital asset in the hands of the taxpayer. That is the gist of cryptocurrency and taxes in the US. Below we explain some details and clarify the implications of the above. Note, we are not tax professionals and we can't offer tax advice. Make sure to see the official guidance below and contact a tax professional if you did any substantial amount of trading in 2017. Okay, here's the bottom line on cryptocurrency and taxes in the US. For investors and traders, it can be gleaned from the official IRS guidance from 2014. You need to reference publication 544 as well. For tax purposes in the US, cryptocurrency is generally treated as property, which is a capital asset like stocks, bonds, or other investment properties. It is not treated like a currency. It is treated like real estate or gold. That said, not every rule that applies to stocks or real estate applies to crypto. Where there used to be a gray area where like-kind transactions were not taxable. And they still aren't on real estate in this new bill, but now they are in crypto. Trading cryptocurrency to fiat currency, like the dollar, is a taxable event. Okay, we knew that. Trading cryptocurrency to cryptocurrency is now a taxable event. You have to calculate the fair market value in USD at the time of the trade. Good luck with that. Gee, that's good luck with that. I like how they just put that in there, because that is not an easy thing to do. That is a very daunting and time-consuming task to have to go and look at every trade you made and, you know, see what the market value was at the time. So I really suggest that everybody going forward, if you're going to trade cryptocurrency, takes very good records, keeps very good records of their trades. US dollar amount of Bitcoin or whatever you're using, Bitcoin, Ethereum, whatever, at the time. US dollar amount of whatever crypto you're getting into at the time. You have to do that now. Dates, times, everything. Using cryptocurrency for goods and services is a taxable event, i.e. spending cryptocurrency is a realization event. Again, you have to calculate the fair market value in USD at the time of the trade. You may also end up owing sales tax. Buying cryptocurrency with USD is not a taxable event. You don't realize gains until you trade, use, or sell your crypto. If you hold longer than a year, you can realize long-term capital gains, which are about half the rate of short-term. You owe taxes when you sell forked coins or coins you mined. Mining and using crypto as a business has unique considerations. See guidance above. For 2017, it isn't clear if you can claim like-kind property exchange, which would make it so you didn't have to realize gains and losses on trades. After December 31st, 2017, 1031 exchanges are limited to real estate. Thus, unless there is a clarification, you'll owe taxes on all crypto trades in 2018 forward, but might be able to claim like-kind with the help of your accountant in 2017. See Forbes, loophole allows tax-free Bitcoin exchanges into 2018 for a breakdown of what may or may not be possible. To find out what you owe, you have to tally up your gains and losses in a year and deduct this from your cost basis. Good luck. Most exchanges keep track of your exchanges, but not their value in USD. Your accountant may use reasonable estimates. If you don't know the exact fair market value at the time of a trade or use of cryptocurrency, use your best reasonable estimates. Moving the same coin between two wallets or exchanges shouldn't be a taxable event, but you don't have to account for it. Exchanges might treat these as taxable events by default, so make sure to not go off their records alone. FIFO rules should be optional. You should be able to choose between FIFO and LIFO. FIFO and LIFO, however you want to say it. The wash rule likely doesn't apply to crypto. Section 1091, wash sale rules only mention securities, not intangible property. There are loopholes in the new tax bill that let high-frequency traders use a pass-through to benefit. Essentially, you would create an LLC for your trading. You have to be trading a good amount in terms of volume and US dollar values for this to work. See a professional for advice if you think this applies to you. You must make a good faith effort to claim your crypto and pay your taxes no matter which route you take. Trying to hide your assets is tax evasion, a federal offense. Making a good faith effort but getting it wrong results in a fee. If you think you might owe taxes from past years, file an amendment return and get right with the IRS before they come looking for you. When you file, be consistent. You can't do FIFO over here, like kind over there, wash rule here, but not there, etc. If you did anything other than hold, you essentially must see a tax professional ASAP. Local CPA, for example. The lack of clarification this year, plus the Coinbase lawsuit, hints at the idea that the IRS will have its eye out for traders who moved more than $20,000 in crypto. You must make a good faith effort if you moved more than $20,000 in crypto, even just between wallets. How capital gains work. All gains and losses in a tax year, January 1st to December 31st, are weighted against each other. You pay taxes on profits in that year. Short-term rate is very similar to the ordinary income rate. The long-term rate on assets held over 365 days is about half the rate. Long-term gains can be realized at any point in a tax year via the above methods. Please note that if you calculate your gains and losses as first in, first out, you are realizing all your long-term gains. Lastly, on $3,000 in losses can be carried over between years. So if you have more losses than gains, you can only bring $3,000 worth forward to each year. Tip: it can make your life simple to cash out before midnight on December 31st and start again next year, as that would ensure all gains and losses are set in stone before the end of the tax year. Likewise, going all in on crypto you don't currently hold essentially has the same effect if you treat crypto to crypto as a taxable event. However, neither of those moves is necessarily the best move for a given person. Those moves potentially hit the reset button on one hand, ensuring all the year's gains and losses stay in that year, but realizes all gains and losses with the other, meaning that you no longer going long on any crypto investments. The problem here is that like kind applies. Then cashing out limits your options, and if it does apply, then trading to crypto could potentially be pointless. It stinks that there was a serious lack of clarification this year, but it is what it is. Play it safe and see a professional before you go panic selling or trading due to tax implications. In general, if you are unsure, then do what you would do if there were no tax implications, but be ready to pay taxes on profits. Let's just read this warning, and that's the end of it. Warning: if you make great gains this year on paper, but then crypto goes to heck next year, you could end up owing a ton of money to the IRS. So the IRS you don't have. You could run into real problems if crypto goes to zero, very unlikely, or if you panic and sell low. Seek guidance from a professional before making rash moves. Like kind rules could potentially get you out of a mess like this, like the cases above, but you'll need to file forms and attest to a very specific situation. You can't do this alone. You must seek professional assistance. Even if you do file like kind, the IRS can be like, nope, and send you a bill. Don't put it all on crypto if you don't have the fiat to cover the tax implications. But remember, if you are already in crypto, going to USD before the end of the year means for sure you are realizing gains and losses. There are way more considerations than there is time. Next year, make sure you are prepared well in advance. Fingers crossed the IRS bothers to provide guidance beyond the 2014 guidance moving forward. With the 1,000% plus rise in the price of crypto assets and all, it would only make sense. So basically, not that doing your taxes and when it comes to cryptos was easy prior to this, but it was a lot easier. Now this is literally going to be hell, and expect to pay big money to a tax professional because it's going to be hell for whoever does it. All right, they're really sticking it to us bad with this, and it's funny because I just did a video on taxes shortly before the end of the year, a few months ago, and now that just doesn't apply anymore. It's all, they're really just trying to get money from us any way they can. So, all those nice big numbers in your blockfolio, and you're like, oh yeah, I'm doing so great. Get ready to deduct a shit ton of money in US dollar terms off that when you want to cash out. So for somebody who's middle class like me, who this tax bill was supposed to help, I don't see how this is friggin' helping me. This is not helping me at all, or my family. So you know, I don't know. It's like once you start to get a little bit of hope, you know, like, damn, things are good. You know, things are actually going well. I'm gonna be able to buy a house outright. Things are gonna be good. This bullshit comes along and just totally puts a damper on everything. So I don't know, guys. I mean, I don't feel like I'm being over dramatic about this. This is something that to me is pure bullshit. You know, I mean, this could end up to the point where a lot of people are paying half their profits or more in taxes. That's freaking insane. You know, how does that help anybody other than the freaking government? So, you know, I don't know. This is something that we need to fight. All right. Do something. Anything you guys can think of, we need to do something to fight this. You know, it's pretty much set in stone now, so it's going to be a lot harder to have anything done about it. But I'm open for suggestions. Anybody has any ideas of anything we could possibly do? Aside from tax evasion? You know, let me know. Anyway, guys, I don't know. I just, you know, this has always been there since I found out about it in the back of my mind, but I never really put a ton of thought into it until just very recently. And, you know, now the more I think about it, the more pissed off I get. And rightfully so. I mean, you should be pissed off too. If you are a US citizen and you're in cryptos, you should be friggin' pissed. You should be ripping mad. So, anyway, guys, I don't know. Let me know what you guys think about this. Any ideas you have. If it's something you don't want to post on YouTube, we could talk through email. But I don't know. Shit like this kind of makes you feel defeated in a way. So, anyway, guys, follow me on Twitter at TruthBlitzMedia, and I'll see you guys soon.